Alright guys, welcome back to the channel. Bitcoin nearly at another new all-time high, plenty of signs that we've got further to go. However, there are also some significant signs that we have dumb money returning to the market. Now you might have heard this term before, sometimes it's referred to as retail traders, and we're all part of that, myself included. So how do we go from being essentially dumb money to smart money without having to get into the hedge funds and other funds that have all the access to the data that makes them smart money. This is off the back of my experience in crypto for the last 7.5 years, trading the market since 2010 and being an investor in real estate since 2006. So without further ado, smash up the like, subscribe to the channel if you are new here, as each of the day's analysis builds upon the previous day, and I don't want you to miss out on any of that analysis. We definitely don't want to be the dumb money come the next peak. It's your home of macro cycle analysis. I'm covering Bitcoin, cryptos, the stock markets, and the real estate cycle. You guys possibly know the deal by now. So let's kick it off with the dumb money retail signs. I'll get to the definition in a moment because I know it does trigger a few and we don't want that. We just want to keep a level head and get through the analysis. Now I've got several things here which I'll go through in detail with you, but first, dumb money versus smart money, and then I'll get into Bitcoin and how to identify this and get through it and use some of these for yourself so you can avoid it as we continue up in this bull market, right? The average individual investor who trade money are often shoved under the dumb money umbrella, so individual investors. If you fall in this category, try not to take offense. The term dumb money and smart money were coined by the financial media, not to insult anyone's intelligence, but to describe the different groups. Well, sure, not to insult. Big institutional investors and mutual fund companies are labeled smart money. They obviously have an unfair advantage when it comes to us run-of-the-mill individuals. Now, I'd argue that we potentially have a leg up on these guys because they have to run through very strict criteria. So they have to meet certain criteria to make trades, and obviously they're managing other people's money, so lots of things can go wrong. However, we can do what we want with our money, which is also a very dangerous thing for a lot of people, and that's what I want to help you guys out with today. And several of these topics that come up might be seen as, well, how is that dumb money? Why wouldn't you want to know what BlackRock is doing, or Michael Saylor, or ETF flows for BTC? I would again argue that a lot of these indicators or signals that people run to when the market is going up, when Bitcoin's going up, when crypto's going up, they run to these things to confirm their bias. And their bias is that prices have to keep going up based on something else. So that's just the first step. And then how do we go from being one of these people to, I guess, looking at the markets a little more in depth with information that is there for everyone and how to use that information for, I guess, our best advantage to make profits from the market. And I'll show you examples of how we've done that in real time. Now, I'm not 100% at getting every single market turn. I don't claim to be. I just use some of these tools and indicators to help me identify where lows are potentially coming in, where tops are potentially coming in, and how to manage my risk and reward in the market. So basically, to keep my head about myself. So now we've got a cover of what dumb money and retail is. Let's take a look at a few of these, and some of them will be discussion topics. Others I'll show you on the charts as well. The first being Bitcoin ETF flows. Mostly used as a confirmation bias, like a confirmation, using it as your analysis to say that, well, if there's a lot of money coming in and the ETF flows are going up, therefore it's a great time to continue to invest, basically buy Bitcoin. And although that can be said for a period of time, it's not always the greatest tool. And over the last 10 or so months, basically this goes back to January, we're now in October, we have used this on the channel in real time to show that there is a very high likelihood, in conjunction with our other indicators, the ETF inflows have been a fantastic contrarian signal despite what the masses have been looking at. They see inflows go up, they expect higher and higher prices. But we've looked back on several of these points in the market and shown that around these times is when the market is potentially turning. I'll take March 12th as an example. This was the highest inflows for the ETF history up to that point. And it actually still is the highest inflows. Yesterday we got 11.9 thousand. Going back to June, we had 12.6 thousand, and then taking that March 12th was 13.7. Now, if you don't remember dates, the 12th was almost near the exact top of the market. So here's the 11th, here's the 12th. So you have the inflows, and then the data comes out for those days around that same period. Some of the websites will show it the day after, so you just got to pay attention to those dates. Either way, it's around those peaks. So you had the most amount of inflows at the all-time high. That's one example. There was another example that we saw in June as the market was rising up here around the 4th. And a few days later, you basically peaked out, and then the market came crashing down from that point. So time and time again, this shows up in the market. And it's also around some of those lows. You had some of the most, the highest day of outflows, May 1st. So nearly 10,000 left the market. And we know from history, May 1st, right here, at the bottom. The market ran up, and then we had another signal at the top, and then the market ran down from that point. So as I said, we're not trying to call the exact turns. Sometimes it works out, and you're not trying to get the final leg of the move, right? The absolute peak. For now, it actually worked out for that top, which kept the market down for nearly 8 months. But it's really something to pay attention to with confirmation bias. If you're looking for reasons that the market must keep going up, this, for one, is definitely not one of those. You don't want to be basing all of your decisions on ETF flows, basically more and more money coming in. That's essentially a dumb money retail type of indicator here to give you that confirmation bias. So the next thing we can look at is, what did such and such say? What did Michael Saylor say? What did any big name in the space that you're looking at? And in our case, we're obviously looking at Bitcoin and cryptos, and everyone sort of wants to know what Michael Saylor is saying. But you could insert anyone here. You've got CEOs of different companies that are in crypto. You know, maybe it's Coinbase, maybe it's another exchange like Kraken, maybe it's another company like some sort of mining company, or obviously MicroStrategy is Michael Saylor. So it's the same sort of thing. People sort of look to these guys. Oh, Kathy Wood is another one, right? From ARK Invest. What do they say? Are they saying that Bitcoin should keep going up based on these reasons that seem pretty logical when you look at their own analysis? Sure. These things are there all the time, but they typically become louder at the peaks of the market, especially if it's bullish. You always hear bullish news towards the peaks, and that bullish news gets louder and louder towards the peak. The same deal for bearish news, right? But it always gets louder and louder towards the bottom, and typically the loudest at or around the lows. And if you're paying attention to GAN analysis, your higher lows as well. So that's pretty much what I would say with these two. And if you want to use it, great. I would keep this in the back of your trading journals. So when you start to see these things pop up, it's really a sign that things are probably getting a little overheated. All right, on to the next points with signals to look out for so you don't become part of the dumb money at the next peak. And the timing of now, I think, is a fantastic time to reflect on these issues, because it's still fresh enough in people's minds that we've seen this already January, February, March of 2024, and hopefully you bring this with you into this next bull stage. So I'm trying to set all of us up here, remind ourselves, because that's pretty much what we do here, looking at history, and know how to not make these same mistakes and know how to make better decisions in the future. So the next one here, number 5, because we've covered all these, referencing big wallets. Pretty straightforward. You've got Bitcoin, there's big wallets out there that are moving BTC around. The problem with this is it could be anything. They could be moving it onto exchanges, they could be moving it off exchanges. This used to be a bigger issue back in the day, meaning like previous cycles, people would think, oh, they're putting it onto the exchange, that means price is going to go down because they want to sell. Oh, they're moving it off exchanges, that means price is going to go up because they're going to hodl, right? And it could just be an exchange moving it into cold storage. It could be an exchange moving the Bitcoin back onto the exchange to have more liquidity. You just don't know. And some people look at other wallets as if it's a big whale that is telling them this is the buy signal, this is the sell signal, right? If you're not following your own plan, you're planning to fail. The old saying there. So referencing big wallets, it's another sign of dumb money retail. So if you start to see a lot of this pop up in terms of people using this as their analysis to confirm that there is more bullishness to the upside, big red flags. So I can almost put here, these are red flags. Look, I know that maybe some of your favorite analysts or YouTubers or X people, whoever, crypto, Twitter, might be using these things as that confirmation. I'm just telling you what I've seen in the 2017 bull market and at the peak and then the collapse. And I got sucked into it then too. I saw it in 2020, 2021, 2022. I didn't get as sucked into it at that time. I was fortunate enough to get out of a lot of positions, but I saw a lot of people that did get swept up in it. And then again, now in 2023, 2024, it's almost like it's on repeat. People are just not learning from history, or they're just new to the game, so they just don't really know. So hopefully I can share that sort of 7+ years of experience with you so that you don't fall into that same trap. So yeah, if your favorite people are doing this, okay, let them do them. I'm just sharing with you what's worked for me. Focus on Bitcoin miners and MicroStrategy. Basically telling you that these companies are the way, that they are going to give us insights as to what happens next. I'm pausing here, I'm trying not to say the wrong thing, but look, I can get it out, right? Even the CEOs of these companies get a lot of things wrong. They'll be buying tops. If you remember back in 2021, you had El Salvador. They were buying big time at the peak of the bull market. And then when the market crashed 70%, Bitcoin was down 15K, 20K, they were buying fractions of what they were buying at the top. This is people running countries. And the same thing happens for CEOs, example, MicroStrategy. They're buying up big at the peaks. They're buying lower as well. MicroStrategy wasn't one of the worst ones. But they buy way too much at the top when things are exciting, because it's easier to get money at that time, remember? There's a lot more credit created. People are more interested to invest when prices are high as opposed to when they are low. And that goes for smart money as well. Smart money do that at the peaks all the time. Smart money in the sense of this definition here, right? So that's another thing there. I wouldn't be personally focusing on miners and MicroStrategy and so on, other stocks, to give me some sort of major indicator there. Basically, if the CEOs are buying, that's like a great sign that everything's going to be going up. However, I would use some of their charts. Like I'll use the chart to identify whether things are getting a bit overheated, and maybe we'll be looking for lower highs when Bitcoin's putting in a higher high. There might be some sign there that we could use in the future, but I would pretty much just work on these stocks using their charts to give me the indicators, as opposed to focusing on their day-to-day fundamentals around Bitcoin, like holding a lot of Bitcoin. So that leads me to number 7, comparing Bitcoin to gold and global businesses. The main thing that comes up here is how big can Bitcoin get? Like how big can the market cap get? And then you start getting all of these comparisons like, well, if Bitcoin is 1 trillion now and gold is, 18 trillion now, that's not really the point. It's just Bitcoin can get to this. Oh, if there's a global business that like Saudi Aramco, right? They might be worth 4 trillion. I'm just making up numbers here. I can't remember exactly. 3-4 trillion, whatever it is. Okay, Apple's up there. Maybe Bitcoin can be worth more than this company one day. It's like, who else does this in their trading? Who else does this with their investments? You don't do this with your stocks to say, oh, this company could be worth that. Although, I should eat my words because some people do that. But say it's like, real estate. Oh, could this be worth the price of New York? Could like real estate in Brisbane, Australia, be worth the price of New York one day? Maybe, but what type of comparison is that? It's pretty stupid, in my opinion, obviously. Maybe it offends some. Number 8, looking at things that the US government is saying and doing. Now, this might have a little bit more of an effect short term with the volatility, but if the cycle is up, if the government says something bad, yes, you might get some volatility in the swings, but it's still going to keep going up. If the cycle is down and the government says something bad, it's just going to exacerbate the current trend to the downside. That's pretty much what happens. So I'm using US government this time because they're pretty much the biggest player when it comes to, say, government and crypto for this cycle. In 2017, US really didn't say much about crypto at the time. They weren't interested. And the main player then was China. And then last cycle in 2020, 2021, it was, I wouldn't say even, but you had a lot more to do with US back then as well. Everyone thought, well, it's coming in, everyone's going to be buying up in their ETFs and so on and so forth. So the US government had a bit more of pressure there. Now this cycle, it seems to be all US and not much China at all. So just be cautious of people sort of referencing what the US government is saying and saying that, well, it's something bad, therefore the market must collapse. It just depends on where you are in the cycle and what happens with these. And this goes for every single market. I've seen it for 18 years. If the cycle is up, bad news is a part of the wall of worry, puts in a higher low, and the market keeps going in the direction. If the cycle is down, well, then bad news is just going to keep pushing the price even further. But good news is potentially just going to give a little bit of a pump, a bit of a rally, and then the cycle will continue down. So it goes for the opposite as well. Partnerships, man, this was mental in 2017. Such and such, ICO, which is what they were back in the day, your different altcoins, is partnering with this and that, and MasterCard and Visa's coming. And look at Coinbase coming together with Visa now. It's like, it's the same thing with the XRP people, unfortunately. They have all these partnerships that have been going on for 13 years or whatever it is now. They were 2013, 11 years, okay? And the price just keeps going down and down and down and down. Unfortunately, this is not really worth the paper that it's written on or the screen that it's typed on. They can work out. There are some big partnerships. So I'm not trying to discredit all of them. What I'm trying to say is using this the way dumb money and retail use it to say that, wow, this is happening, therefore price is going up, is, from what I've seen, the more often than not, the probability show it's not the greatest way to be forming an opinion of your thoughts on the direction of the market. And the last couple here, these ones work out relatively well. Fear and greed, you've probably seen me talk about it here on the channel. If not, subscribe, like, and you'll see more of this content come up in your newsfeed. And Google Trend Words, which is a very good sign at the moment. So here is some real stuff that is happening in real time before I get to some of the charts as well. Over here, we got Bitcoin worldwide past 5 years. We have been following this week after week. It has been flatlining at 18, 19. There was even a case where it hit 17. However, look at this last week with Bitcoin running up past 70K, touching 73-ish. Now we've started to break out of this Google Trends. And so this is signs, going back to this one here, signs that dumb money retail is here. So why it matters and how to avoid ending up like them. Here is your Google Trend Words. People are searching Bitcoin, so it's becoming a bigger trend. It's now at 25. This is the highest level it's been since the August crash. So we had that August low, which was a macro higher low, which held up above the bull market support level of $44,000 and also held up above the 49K level. Massive, massive higher close with big volume coming in. So this seems to be another sign that retail is coming back, or at least you've got a lot more search volume for the word Bitcoin right now. And we've used this in the past, like in 2020, you can see this start to creep up. The main thing you want to look at here is it going to break to higher highs? Because you can see May 2020, basically the market started to push higher. March 2020 was COVID dump. So you can see the peak here in the search volume. And then you also had a peak here in July, August when Bitcoin was just creeping up, but it was putting in lower highs. So you still didn't have retail there. Okay, flatlined for a while and then started to break out, put in a higher low, testing those tops. Like TA just works on everything. It works on everything if you know how to use it. Technical analysis. It can be powerful in the right hands and it can be absolutely detrimental in the wrong hands. And then we started to break out to new highs again. So pretty good signs there. At the moment, we're still at lower high territory, but this has been the first time since that August dump where interest has started to come back. We didn't really see much interest going all the way back until, say, March. There really hasn't been that much interest since then, March and April, slightly into May. But anyway, the point there is this is looking pretty good. Google Trend Words. The fear and greed is also there. I wrote a post about this today. First time since June did we see Bitcoin and crypto in extreme greed for 2 consecutive days, right? It could be 3, it could be 4, but really prior to this, we only saw it jump up once into extreme greed. Other than that, it's sort of greed, then back down to neutral. And you're seeing a bit of an accumulation or reaccumulation of BTC at this point. I think it's going to go higher. And the good thing you can do with this video is bookmark it, save it, put it on your playlist so you can come back to it to see how my analysis has worked out. I suggest you do that. I do that for all the people who I look to follow, and that's the reason why I follow barely anyone, because a lot of things are said, nothing's followed up, and the majority of the time it rarely works out. You're going to get some things wrong. I'm going to get some things wrong. That's just normal. But over the long term, I expect in myself to get more right than wrong, or at least follow the trends to bigger gains to wipe out any of those losses. Okay. So anyway, in this extreme greed, the last time we saw sustained time in extreme greed was near the top back in February, March, April. There was still a lot of price action to be had. So it doesn't mean that as soon as you see this, it's going to collapse. People get on that bandwagon way too quick. I have been guilty of that too. So I'm trying to learn from my mistakes of the past that this is not, by no means is it a top signal. It's just be cautious of people spruiking how high Bitcoin ETFs, the inflows are in, or Michael Saylor's saying something now, as I've talked about earlier in this video, which is what led me to making this video today. So I don't know, I tried to come up with a saying here: don't lose your head when going after the bread. You like it? I'll put it in the pinned comment down below. You can like that comment to let me know. So we are at 72,000 as I'm filming this. Some of the things to look out for. So I've gone through all these 11, and this is by no means an extensive, complete list. There is so many more things we can look at, but I think these are some of the major ones that I've currently seen now coming up again, and what I saw about 7-8 months ago towards the peak, and what I've seen in the past. You can add a few more things in here, and we'll add to it through, throughout the bull market as well. Come back to it and see if it rings true again towards the next peak. So Bitcoin at the moment, the things I'm liking the look of are the higher lows. So in terms of how do you avoid these sorts of things? Well, one of them we had, one of them that I showed was the 3-day signal. Okay, so that's this move that came in at the peak. That was one of our first signs to say that probably things are shifting, but because retail, they kind of want the answer today or yesterday so they can make their decisions, right? They don't trust these signals, and they take time. At 60K here, I heard a lot of people, the same ones who talk about all this sort of stuff, say, buy the 60K dip. It's coming back, right? But this signal told us that it was unlikely that you're going to see the market just skyrocket to a price target that's worthwhile taking the risk at that point. Doesn't mean we couldn't have gone higher. Sure, we could have hit 75, 76, 78K and then come back down. That would be a bad sign. Just the same as what happened at the previous peak. It went slightly higher, then came back underneath, but everyone got excited again. And then from this signal, you just see it take its time to start to break down. That is weeks and weeks. This is what happens. But if you take your profits or take some profits, you're not going to feel as bad once you see a collapse, another collapse. You get excited again, but then the next collapse. And this makes you feel way better taking some action, knowing that, well, now that you know the market went down. Now, if the market goes up, maybe you feel shitty. But unless you've been around the block a few times to know what it's like to see the market go down against you, knowing that you got the signs there to have gotten out, you might not be able to comprehend just how brilliant taking some action when you see these signs is, right? You just don't appreciate it unless you've been around quite some time. You just think about all the money that you didn't make on the way up. But again, you still needed to sell out as the market goes up. So that's one of the major ones there. I love this 3-day signal at extreme points. Okay, so we'll look at that as the market continues to unfold as well. Now, another one is time frames. Now, I do a lot of stuff around time frames on the channel, and we've been looking at, on a longer term, monthly moves. So you got here, this was about 7-month accumulation, and then the breakout, and you went on for about 6 months. We're now in a roughly 7 to 8 month accumulation. If we get the breakout, well, then we could start to look towards at least a few months to the upside and then continue to extend that. If, like we did with the last one at this peak, Bitcoin was up for 6 months within our swing. So I've got this here. You can throw it on the swing indicator. That was the move there. 1, 2, 3, 4, 5, 6 to the peak. What I was saying at the time was it's not impossible for it to go another month. It's just very, very unlikely because Bitcoin typically doesn't do these sort of extreme moves. There's just not enough energy in the market for it to keep going for more than sort of 5 to 7 months in a row before a pullback. And I went through the history of Bitcoin and just showed how many times it's actually happened. I think it happened possibly twice in its entire history. So that's another massive, massive one to keep in your tool chest, is to look at the probability of the market going up with the trend, and where do these signals come in? A lot of this crap was coming in March when the move was already extended so far. And it's like, well, what is the likelihood of it going up even more? It could go up for another month and maybe it shoots a few 100%. That's just part of the game, right? But if you keep your head about you and you see that a lot of these things are coming up, there's a lot of hype, there's a lot of greed, extreme greed, lots of people searching for stuff, people putting in their own confirmation bias to go, what does Michael Saylor think? What does Kathy Wood think? What is a BlackRock doing? Where are the inflows? Where are the inflows going? And the time is nearly up, which is the most important. Then you can at least be prepared for any sort of correction and just don't blow your entire load at those times. Maybe it's worthwhile putting a little bit in. So cut that back. Could be 10%, 15%, 20%. I don't know what you're trading with. Okay, I don't want to know either. But yeah, you just shouldn't be doing 100% at those times. That's one big thing. And that's how you are able to remain a trader longer term or an investor longer term, because you're not blowing your load at the top when everyone else is getting super excited. All right, you don't want to be these guys here. So why it matters, why all this stuff matters, and how to avoid ending up like them. There are two major things there that helped get us to the March peak. This video is long enough, but I will have an update or a part 2 coming up in the future. So be sure to subscribe. And if you did enjoy this and you want to see another one, hit that like button. Over 3,500 likes, I'll do another one and continue to follow up with other signals that will help you avoid being part of the retail, especially when we're at such a pivotal point right now on the total cryptocurrency market cap, on BTC, ETH BTC, as well as at a pivotal point, Solana, and so many other cryptocurrencies, right? Thanks again, guys. I'll see you at the next one. Till then, take care and peace out.